And Goldman Sachs has signaled a recovery for India, suggesting that the worst phase of the country's economic slowdown and earning decline is likely behind. The global financial firm forecasts a real GDP growth of 6.4% in the second half of 2025, indicating a potential rebound for Asia's third largest economy. The firm's latest report highlights that despite the optimism, market volatility may persist. This is due to the high domestic investment in small and mid-cap stocks, along with global uncertainties, including potential trade tariffs. India's stock market has already seen a 10% decline in the Nifty 50 index since its September 2024 peak, largely driven by macroeconomic challenges and a drop in valuation multiple across various sectors. Goldman Sachs attributes the slowdown to cyclical rather than structural factors. The report points to tight credit regulations, cautious monetary policies, and liquidity constraints in 2023 as major contributors to weaker growth. However, it also suggests that recent policy measures, including income tax relief and potential rate cuts by the Reserve Bank of India, could support economic recovery. While Goldman Sachs maintains a market-weight stance on India within emerging markets, they do urge investors to focus on stocks with strong earnings visibility and quality growth. The firm has warned, however, that risks remain, particularly with the potential for new US tariffs on Indian goods, which could disrupt trade and economic expansion as India continues its recovery. The global community is watching closely and considering its significant role in the global economy and the potential for emerging market growth amidst ongoing geopolitical challenges. And for more on this, we're now being joined by Mr. Anand K. Rathi from Bengaluru. He's the co-founder of Mira Money. Thank you so much for joining us on World Business Watch.
Thank you. Good morning.
Good morning. Now, let's get right into it. What's your take on the recent market moves and what impact do you see from Trump's reciprocal tariffs that are expected to take effect on the 2nd of April?
So the month of March has been good for the markets. We have seen decent amount of recovery back in Nifty and most of the indices of Nifty. One of the reasons probably could be that there was excesses. You know, when India started correcting way back after September, it was purely because there was too much of an excesses built on the bull side, where the markets had run up way ahead of its fundamentals. And as luck would have it, the corporate earnings started coming down. And that was one of the reasons for the markets to start coming down. And after that, Trump tariff and all that started working on India's market negatively. Especially the month of March, we started recovering a bit because, again, on the downside, we were a little excess. In the sense, we corrected way more than it ideally should have corrected. Net now, I think we are in a safe zone. If you see in the last 1 year, March to March, last year and now, we are up by about 4.5% or 5%. And this year we are down by about, this year to date, we are down by about 1%. So now the excesses have been more or less corrected. And I believe, from now on, it's going to be purely, relatively newer news that will drive the markets up or down.
All right.
To talk about Trump tariff,
yes, please continue. Sorry.
To talk about Trump tariff, yes, April 2nd is near and there's a lot of news around reciprocal tariff and stuff like that. But we believe that India is one of the least affected or will be one of the least affected nation, primarily because our exports to the US is not significantly very high. It's about 2% of our overall GDP number. Sectors like few sectors like gems and jewelry, maybe chemicals, maybe some bit of metals will get affected along with auto and pharma.
Right, Mr. Rathi. In fact, that's exactly what I was going to come to next. So just for clarity on this, how would you rate the risk from Trump's economic broadsides on Indian stocks? From what I'm gauging, you're saying that India will be, of course, as you mentioned, the least affected. But still, what's your overall outlook for Indian stocks?
So if you go a little deeper into Trump tariff, if you actually see even on auto, while people are worried, if you see auto stocks have significantly corrected post the 25% reciprocal tariff that's Trump announced, India has roughly about $9 million, just $9 million of export of the passenger cars and about $13 million on the truck side. So it's not going to be significantly big because we don't export as much to the US. And if you actually see overall, I think auto sector is okay. But under auto, if you see ancillaries are the ones that will deeply get affected in our view. But yes, sectors like gems and jewelry, where there was a significant amount of export, we totally in India, from India, we exported about $74 billion last year. So there are sectors like gems and jewelry which will get badly impacted, chemicals which will get badly impacted. If you were to put all this together and gauge the impact of it on India, I think fairly, I mean, yes, we will have some impact, but it is not going to be too significant, is our belief. And even reports from a lot of other research firms also point out to that. So our exports will come down by roughly about 3 to 3.5% is what our assessment is.
All right. Well, Mr. Rathi, thank you so much for joining us on World Business Watch with your insights on this.
Thank you.
For latest news, download the WION app and subscribe to our YouTube channel.